Hi, welcome to my second video. So this is on managing money flows, how I manage money using various bank accounts, credit cards and mutual funds. Let me pause for you to read through the disclaimer. Let's continue. So as part of this presentation, we are going to look at six different items. The core idea behind how I manage money. So what are all the flows I use for various purposes like investment, living expenses, medical expenses, and travel expenses. What are the key takeaway from this particular presentation? So core idea is that money needs to be separated by purpose and budgeted upfront yearly, and it is allocated monthly in a more automatic way. And each bank account or a credit card or a associated mutual fund serves a specific purpose there. If you see here, I have like across the family, we have accounts tagged for various purposes. So there are like essentially we have five different accounts. One for the income account where all the salary lands in, and then we have four different accounts managing four different kinds of things. One account for investment where all the investments are routed via this investment account so that everything is like easy to take them out, look into the statements and so on. And all the expenses are spent via a specific account where all the expenses are managed. And there's a separate medical account exists so that day-to-day expenses or unexpected medical expenses are manageable. And there's a separate account for travel where which is primarily managed for various trips or vacations or experience that are getting planned. And looking at the next section, right? So we are looking at the various credit cards I am using at this point, where we have so various credit cards I'm using. There are like multiple credit cards, and some of them are like add-on cards tagged for a particular purpose and so on. So there is a credit card which is a general purpose credit card which is used for all day-to-day expenses, and also because of rewards, I'm using that for purchasing some jewelry schemes as well. And then there are various ones tagged to particular purpose, things like food. So especially the ones which are offering a discounted rate, or let's say 5%, 10% kind of a discounts, which is specific like credit card giving for a specific product and so on. And then there is a separate credit card tagged for medical, and then there is another one which is like used specifically for travel. So let's look at the investments, right? So the investments account, like the money flows from salary account into the investment account. From the investment account, it flows into mutual funds, international ETF, and gold jewelry schemes. The mutual funds covers equity, debt, and gold funds. And again, gold scheme, I'm routing it via expense credit card for specifically for rewards. If you look at this, how the flow happens, right? So this is how it works, right? So there is a salary account where money lands in. And from there, I'm transferring upfront allocated percentage of the salary into this investment account. And from there, it goes into the mutual fund where I buy index funds, data arbitrage fund, and gold mutual funds. And there is another flow. If you see there, there is a expense credit card which I use to buy gold jewelry scheme. From where it's getting billed and paid from the investment account. And there is another flow where I the money is routed into an international broker account, and then I go and buy Nasdaq 100. So there is a that was the first video I posted earlier, which you can go and look at if you are interested. So how that works. So let's look at the living expenses, right? So living expenses, what does it mean, right? So living expenses, everything except medical and travel. Here using like various credit cards, and there's a specific expense account which I am using for this purpose. And there is a reservation within the salary account for yearly expenses. So when I transfer money into the living expense, it's not 100%. It's more like 80% of the expenses are transferred in, and 20% stays within the salary account. And on the basis of the expenses, yearly expenses that's occurring around the year, additional money is released from the salary account into the expenses account. And this one is relatively simpler. There is no mutual fund involved here. So if you see this particular flow, it's pretty simple and straightforward, like, right? So the money flows into the salary account. There is a monthly allocation that happens that comes in into the expense account. From the expense account, either via UPI, I spend the money directly, when we shop things, or based on the place where we are transacting with them. And the other one on where the credit cards are used, where like multiple credit cards, various purposes, primarily reduction or rewards basis, right? So the credit cards are used to maximize the rewards there. And this was pretty simple. And the yearly allocation happens post once the expenses are spent. Uh, the yearly expenses are additional flow that flows in from salary account into the expense account. So essentially, let's say if you divide the money into 80/20, 80% for regular expenses and 20% accumulated are kept separate for yearly allocation. And this getting again transferred into the expense account when those yearly things happen. So medical expenses, there are upfront. There is a monthly allocation for medical expenses. Essentially, there are two kinds of medical expenses. One is regular ongoing medical expenses, buying medicine, visiting doctors, and so on. And there can be a planned medical expenses where things like pregnancy and any other uh, planned activities or planned treatment that needs to be taken care. So the separate account exists because this will ensure that required amount what we typically need for medical expenses is kept separate. And I am using a medical account and a medical credit card for this particular purposes. And hospitalizations are covered by insurance and then funded by a medical fund or an emergency fund. So we see the flow here, right? So the money flows into the salary account. From there, it goes into a medical account. From there, it's spent via UPI, or there's a medical credit card which I am uses where the credit card bills are paid from the same medical account, right? So this is a one flow which is a regular flow, and there is a other flow where there is a cases where some hospitalization is required. It can be planned or it can be an emergency, or whatever, right? So all these hospitalizations needs to be covered using this health insurance, and what are the remaining amount we have to pay will be covered by this medical credit card. And on the how do we go and pay this credit card bill, right? So there is a separate mutual funds, a couple of them. One for emergency fund, which is a standard emergency fund that we have, and then there is a separate medical fund, which is say for things like pregnancy. What I have done in the past is that we go and accumulate money into an arbitrage mutual fund where it's invested over the period, and it is redeemed after the bill is generated and so on, right? So that is again manage all the investments, as I said earlier. I'm managing via this investment account. So the money flows from salary account into investment account if there is a planned allocation, right? So there is some event in future that needs to be taken care, has to be accounted and planned upfront, and it flows into the investment account, into the medical fund, and it keeps accumulating. Once that a treatment happens, then it is redeemed, and it flows back into the medical account, and then to go and pay the credit cards and so on. So this flow uh, covers both. There are two different medical expenses. One is regular expense, other is hospitalization. Both is getting covered. And in case of hospitalization, there are like planned hospitalization and unplanned ones, right? So this is essentially covering all these fronts. So travel expense covers both domestic and international trips. Travel is again budgeted yearly and allocated monthly. Expenses by a bank account and a credit card, and it is backed by an arbitrage fund. So this is how the travel flow exists, right? So money flows in from salary account into an investment account, and it flows into the travel fund monthly. And at the end of the cycle, we redeem that back into the investment account, and from there it flows into the travel account from which it is getting spent either via credit card or directly from the account, right? So in this flow, it ensures there is some decent growth in the amount compared to keeping them just in the bank account, and also protecting them from um, the usage purpose, right? So in this case, if it's the amount is into the travel fund, redeeming it only when the travel happens. So that way, the what are the travel fund, the money is earmarked for travel, right? So it's not things spent for anything else. So let's look at these key takeaways. So one, segmenting money, what we are achieving, right? So we are reducing the stress, like whether we have money for a particular purpose or not, right? So each of the categories upfront like have its own allocations, and they are earmarked and moved into that appropriate bank account or into the appropriate backing mutual funds associated with it. And things are budgeted and allocated upfront. Things are planned early in the cycle, right? Not just reacting to the things. Things are more like planned upfront, and automating the transfers from will ensure that the flow is very smooth, right? So what are the amount, the split up for various things from moving from salary account into expenses, or medical or travel or investment, everything is planned upfront and saying, okay, this is a percentage of the money that's coming into the salary account goes into the investment, this is a percentage of money that will go into the medical expenses, and this is what will be spent via the travel account, right? And so automatic transfers reduces friction. We don't have to manually manage these transfers and so on. And using of credit cards for various purposes, right? Credit card, I would say two purposes I'm primarily using them for. One is either the reward points and the amount we can redeem them with, and the second part is launch access, which comes with the credit cards. And all the short-term needs like medical and travel is backed using a liquid asset funds, liquid assets such as arbitrage fund, which can be more tax efficient and so on. So thank you for watching my video, right? So follow up, I think we will have a video on how I am managing my emergency fund. I'll go in some depth into the how the emergency fund is managed, how I am having it at this point in time, right? So see you then.